All right, guys, in today's video, I want to talk about different time frame sessions, whether that be the New York session, the Asian session, or the London session, and how they have an impact on price. Now, every aspect of every indicator or any technical analysis is some derivative of time, volume, and price. Price is obviously the most analyzed, volume the second most, and time the least of the three, but still a part of the core trio of different variables affecting every single piece of technical analysis. And hopefully this video will give people a way to incorporate that into their trading methodology. So let's go over to this chart right here. This is the Glassnode indicator. It's Glassnode data, and it's showing you Bitcoin US month over month price change. And this is showing you how the US market is generally, at least during the period of late June and early July, is showing buy side activity. So price is more bullish during the New York Open hours or the US trading session hours. That would be roughly 7:30 New York time. 7:30 New York time is when the open outcry at the New York Stock Exchange opens, and the big block orders hit the market. So if we go here, I've marked that off on the chart here. So you can see 7 a.m. New York time. Just set the trading view to New York time, and you can see we actually do see New York bidding. So this was right before the CPI release, and you see volatility expand down and then expand up. So you get this volatile motion, taking traders on both sides of the market out. But what is key important here is that after the New York session, price bid up. Same thing the next day, and you can measure the highs and lows in relationship to one another, right? So whenever people are looking at, if you're at an hourly chart, there's many different highs and lows. It's like, well, how do you choose which one is the most significant out of all of them, right? Because of course you have to prioritize which highs and lows are significant. Well, if you're trading the New York session, then you want to be looking at the previous New York session. In that case, your high is coming in here. So basically, it doesn't come exactly down to the highs, but it comes down to the core of the New York session, rallies off, breaks the high right here. So you get bullish structure being created right there. Now, I only trade the New York session. I don't trade the London session or the Asian session. I don't even really know what time of day they are. Um, I would assume during the morning hours in London, during the morning hours in Singapore for Asia. But just going back here, you have the euro month over month price change. You can see that European countries are selling, right? So you see more distribution, more offers coming in the London session or the Euro session, European trading hours. And you see the same thing in Asia, right? So during the Asian trading hours, or where the Asian institutional traders are more active, you see more distribution, right, as opposed to the U.S. markets. And that's interesting, right, because the U.S. markets have the tightest monetary policy, but the European Union is printing money, but selling Bitcoin, printing money in Asia, selling Bitcoin. Uh, but that's beside the point. Not really the point of this video. The point is that you can look at this data if you have a Glassnode subscription, or if you don't, I'm sure there's other areas you could find this type of information, and then you can use that to as a source of edge, right? Um, the way I would do that if I were trading this, which candidly I wasn't trading it, but if I was, I'd be seeing that U.S. buying pressure during the New York session, and I would play it, to bullishly in the New York session. And if I know the European and London sessions are you know, uh, more likely to distribute, then I would, you know, be sure to take profit so that the profit from that directionally opposite trade is locked in, um, and maybe it sells off during those sessions, and then in the next New York session, I have an opportunity to trade in the same direction. So again, this is not obviously not a guarantee. It's not going to work out day by day, but it is a source of edge. And I found that just in meeting and talking to different successful traders, it does seem like a lot of the really successful traders I've encountered have sort of zeroed into one market at one time a day, and they trade that market at that session over and over and over. And they've really sort of carved out a very significant edge in that unique niche of the market. Anyway, I hope you guys like this video. Again, just make sure to leave a like on the video, subscribe to the channel, and I'll catch you guys in the next episode.